Today is Monday, October 11th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, Vice President of Grain Research at ADMS, and Alan Bush, ADM Investor Services Senior Financial Economist. Alan, let's start this morning with this. Friday saw a weak U.S. unemployment report. Will this report cause the Fed to delay announcing a tapering schedule of its asset purchase program?
Okay, I'm inclined to think that it will not, although what it may do is cause the Fed to maybe adjust their terminology a little bit so that they could change the pace of the asset withdrawal down the road if the economy were to underperform. So I think the consensus view is that the Fed at their November 3rd meeting will announce a tapering. I think I'm on board with that. But this does bring into question just how much the Fed will be able to taper. My feeling is that they will be doing what I would call a dovish taper, meaning that they'll reduce the accommodation in very small increments.
Alan, what's your outlook for the price direction in the U.S. dollar index?
The dollar index, if the Fed does taper, or at least that is the perception right now, that is causing interest rate differential expectations to favor the dollar index. So right now we're near a one-year high in the dollar. We're higher today. So I think in advance of the Fed meeting and prospects of some of this accommodation withdrawal, the dollar index will continue to advance, and I would expect some new highs for the move in the greenback between now and the November 3rd meeting.
Finally, Alan, you mentioned interest rates. Any news in the interest rate market, particularly the 30-year T-bond futures?
Well, the bonds have been adversely affected by prospects of tapering. But I think that there is another factor where we are seeing prospects of potential for a slowing global economy. So I think that may mitigate the pressure on the downside from all the tapering talk. My belief is, though, once the bad news is out of the way, or the bearish news of tapering is announced, if it is announced at the November 3rd meeting, that this will be a sell the rumor, buy the fact situation. So after that meeting, I think the bonds can start a new leg higher as traders refocus on the state of the economic recovery, which by many accounts is starting to slow. Also, I would think that stock index futures will continue to advance longer term. Any tapering of accommodation is really not going to be enough to overwhelm all of the accommodation that central banks are still providing, especially with the Fed funds rate at 0 to 25 basis points. So the longer term outlook on the indices is still higher despite all of this tapering talk.
Steve, let's talk technicals in the grains. Give us an overview. And one further question here, are higher energy prices also helping the grain markets?
I think each of the grain markets are trading their own fundamentals. The soybean market has been trading lower, in part because of talk about bigger supply and China being a slow buyer of U.S. beans. So we're down near the season lows, and I think that technically the report tomorrow should be bearish, and soybean prices could continue to go lower. Soybean meal prices also trading lower along with soybeans because of slow demand. The soybean oil market has rallied along with the energy markets and talk about increased biofuel demand globally. Corn market has been in a trading range since June. I don't think we'll break out of that trading range yet. Tomorrow's USDA report should be neutral to the corn. We're still going through harvest and still waiting for an increase in export demand, especially from China. The wheat market has been rallying. We have record low global stocks of milling wheat. USDA should have a Federal report tomorrow, so we should trade higher in the wheat market.
Steve, you mentioned tomorrow's report. Could you just run through one more time the expectations?
Well, I think on the stocks report on September 30th, USDA surprised the market with higher soybean 2020 crop. And so we'll see the carryout tomorrow for beans go from 185 to 300 million bushels, which is negative. In the corn, you might see a slight drop in the carryout, but I think the key will be what's going to be our final export numbers. Some people are about 150 million bushels higher than USDA, which could take the carryout down closer to 1.2 billion versus the government's 1.4 eventually. And all the wheat numbers should be positive. Lower Canada crop, lower US crop, lower Russian crop, lower Russian exports. So all those numbers should be positive tomorrow to the wheat market.
Steve, one more question for you this morning. Is there a concern that the U.S. and the world, for that matter, could see food price inflation?
Very much so. I think when you talk to the food companies here in the U.S., they're seeing higher labor costs. They're seeing labor shortages. We're seeing trucking higher costs and slower turns as far as getting things to the consumer. The raw material prices are going to go up, especially in wheat and corn. Energy prices will go up. There's talk that if we have a cold winter this year, nat gas could rally considerably from here. And you're seeing also global crisis in energies in China and also in Europe. So the perception is that we will see higher food inflation down the road. We also note that farmers are seeing at least a 50% increase, in some cases doubling of fertilizer prices because of the energy situation. So farmers next year face declining returns because of these higher energy prices. And they may switch acres away from corn, which makes corn market even more friendly down the road.
Thank you both. Remember, the views and opinions expressed today in this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.